Welcome back to another video. Today I'm actually going to review my entire portfolio with you. That includes all my stocks, ETFs and even crypto. And previously I only focused on my interactive brokers portfolio, which is actually my biggest stock and ETF holding. However, I do have other stock brokers as well, plus of course crypto. So finally I found a great tool that helps me to track all these various holdings and portfolios and ledgers that I have and consolidates them and aggregates them into one dashboard so I can share it with you and see all my holdings in one place. And since I started doing my monthly updates on interest, dividend and cashback income, which you guys seem to like, probably I will do this a monthly affair to give you an update on my portfolio every single month, and hopefully we'll see the positive development over time. So the tool I'm using for this is actually called GetQuin. I've recently done a whole review on the platform. You can see over here all the various brokers that I have integrated automatically synced up with my GetQuin account, which is really nice. You can see here my aggregate holdings, and I'll go through this in a second. It's free of charge to get started, and it auto syncs. If you want some more features, you can of course sign up to the Pro plan, but it's up to you. So if you want to get started, please use my link in the description below or scan the QR code to sign up. And if you made your own account, you can actually also follow me, because the cool thing is it has a social component built in. It's almost like a social network for all things finance. So you'll see my posts, other people's posts, we can interact, and you can then also see my portfolio, which is a really nifty feature. That's the whole social component over here. You can see by recent, by trending, etc. Some really cool aspects to make investing a little bit more fun and involve other people, not just by yourself. But yeah, I started to really like the engagement over there. But in this case, obviously, I want to focus on my own portfolio and share that with you. So as you can see over here, that's the total value I have right now. Now, when you see over here, when I click year to date or max, that number looks really impressive. However, unfortunately, that is not 100% accurate actually, because the one thing that distorts the figures a little bit are the crypto holdings. And that's because of the fact that I don't keep my crypto on any exchange, but I actually keep them on my Ledger hardware wallet. And Ledger, in order to protect your safety online, disguises your public wallet address so that other people can't see and track your transactions. And that way, unfortunately, GetQuin is not able to really transparently track all your various transactions, because you're going to have a number of different public wallet addresses. Anyway, long story short, you can see here that I have a number of Bitcoin wallet addresses. I have one here, another one here. So basically, these are all my Bitcoin holdings condensed into one, but all the individual wallet addresses. So in total, I have 5. So I would have to add them all up to get my total Bitcoin holdings, which you can see obviously under aggregated, because that brings all of them together. You can see right now it's just shy of 40K over here. So the P&L unfortunately does not know where, when and at what price I bought it. So that's a bit of a shame. So it basically only shows you really the current price. So the P&L here is not really something I want to focus on all the cryptocurrencies. For the stocks, it's really accurately tracked. But unfortunately for crypto, it's a little bit deceiving numbers. All the other stocks you see over here, if I click on show more, they are actually really what I have in my portfolio, and they track the buy-in price and the actual price. So that's something interesting and something I want to focus on to go more into it. Now the total net worth is what it is. That excludes all my cash holdings, which is quite significant at this stage. And you obviously, if you've watched my other videos on my monthly income, see where I have the money parked to get that nice interest, because quite a few accounts these days are paying 4%. So it's quite attractive to have a higher cash holding and benefit from those interest payments, because I'm a big dividend investor, but right now a lot of my dividends are actually paying way less than 4%. So I think in that case, it's really interesting to diversify into some cash holding as well. So if I focus on my positions right now, you can see it's actually quite a lot. Now, that's not all the stocks that I bought myself, but in fact, for example, accounts like Trading 212 and Trade Republic, these are accounts that I do use a little bit for myself for investing, even though my biggest account where I personally buy all my stocks is interactive brokers, but using Trading 212 and Trade Republic as well for various purposes, especially Trade Republic to get the interest on my cash, which is 4% currently, which is really attractive. I do also get free shares whenever any one of you signs up to any of those brokers. And of course, while doing so, you're also benefiting by usually getting the equivalent free share. So it's a win-win scenario. And you can see here a number of those stocks that I never bought myself. I'm just randomly getting allocated some of them. And you will see in a second, some of them actually been doing really well. Right, so going back to the aggregated over here, if I start filtering it by P&L performance, so you can see here what have been my biggest success stories so far, and that's purely in percentage return. Some of the amounts you will see down here, they actually returned a higher monetary value to me because I have a bigger position in it, but in terms of percentage, it might be a lower percentage. So let's just base ourselves on the percentage return. So obviously, once again, I will omit Bitcoin and Ethereum. Now then we come to Blackstone, which is actually a stock and company I've been actively buying. And as you can see, made quite a bit of money from it. 234 euros, up 25%. So I still have a small holding of it and I would love to buy more of it. But since they appreciated so much in value right now, I wait for them to come down a little bit again. And then I will definitely in the future buy more of it because they also have a nice high dividend yield, which I always appreciate. Then we have Rolls-Royce, which honestly, I would have never bought it myself. That's actually one of the free stocks that I got, I believe from Trading 212. And you can see here, I mean, actually it turned out to be not too bad in terms of percentage return, 24%. Now the monetary value obviously is very small because also the free stock is rather small, but still, 22 euros up on a stock that I wouldn't have invested in actually is much better than some of the other stocks that I researched myself and really investigated, etc., invested, and right now might be down. So it just shows you sometimes you can also get a bit lucky in the stock market. Then another stock that I didn't buy myself is Netflix, one of the free stocks, up as well, which is good to see. Then we come to another stock that I actually bought myself very purposefully, which is Munich Re, a German reinsurance company. And they're currently up 185 euros or 18.7%. So I'm really happy with that. Even though right now they're a little bit on a downward trajectory, I'm still pretty bullish on them. I was thinking a few times to sell them because I do believe they are a little bit overvalued. And for me, they only pay once a year a dividend. Now, technically, financially, it doesn't make a difference if a company pays monthly, quarterly, or annually, because the dividend yield as a percentage, the payout you get on an annual basis is going to be the same. But it's just, more motivating to get regular dividends paid to you on a monthly or quarterly basis, and annual basis. That's usually German or European company doing that. And I don't know, psychologically, just for me, is something I prefer getting on a ideally quarterly or monthly basis. There aren't too many on a monthly, but quarterly basis is nice to see that. But yeah, overall, I'm very happy with the investment. But at the same time, as I said, I think they are quite expensive at the moment. I don't have a huge position in them, and I might eventually actually trim that position and invest some of those funds into some other higher yielding dividend stocks. Then, of course, we have Apple, a classic company. Unfortunately, the dividend is very little, so that's why I'm not buying too much more of them. Even though I love the company, their fundamentals, I still think they have a long way to go. As you can see, actually, I'm up on them right now, which is nice. But again, in terms of dividend income, they only contribute very little to my overall income. Then we have a couple of more that I got as part of referrals, such as Deutsche Bank, H&M, Microsoft. I actually didn't buy it myself, even though at some stage I was really thinking to buy some more Microsoft, because now with all the AI, where they're going, where they're headed, I really think Microsoft is so strongly positioned for the future, and they're really doing things great. And I think Satya Nadella, the CEO of Microsoft, honestly is arguably one of the top CEOs out there. I mean, every time I hear the guy speak, it's so impressive. He's so well-rounded, such a visionary, and I still think underrated because he's not so loud and aggressive like some of the other CEOs that you see always in the media, but he's highly intelligent, strategic, and all the moves he's done in recent times, I mean, really, hats off to Microsoft. They're really on a run and doing great things. Then a couple of more stocks that I got. I haven't bought it myself. And you can see a small position size like Adidas, Lufthansa, Amazon, Meta. And funnily enough, all those, the stocks that I wouldn't have bought myself, because a lot of them are not really paying a dividend, they're actually up. And it just once again shows you shouldn't only be focusing on dividend stocks if that's not your thing, because ultimately what matters is also total return. And total return is a combination of stock appreciation and dividends, right? Because sometimes you can have a company that pays you a 10% dividend, which sounds amazing, but if in the same year the stock price dropped by, let's say, 20%, you will have a net loss overall, right? Because the dividend payout does not really offset your drop in stock price. Now, some people may say, still, I get 10% dividend. I take that, buy more stocks at a lower price in case the stock price fell. And that way, over the long term, I'll be able to build a bigger position in a particular stock, which, does make sense. If you have a long time horizon and believe in the long-term future of a company, that can be a great strategy. But once again, it just shows also maybe sometimes it might be worth to include a few non-paying dividend stocks into your portfolio as well. So yeah, I'm going to just skip past through all the small positions over here. Walt Disney even is up, which is surprising because they've been so much in the bad press recently. So that's nice to see. Nvidia, of course, a real hype stock in recent time with all the AI chips, etc. So they're really on the run there. Nike, Airbus, once again, really small stocks. Then we come to arguably my largest position, which is the S&P 500 ETF, WUSA, which I'm buying. That's my holding right now. And you can see I'm nicely up over there, 3.43% or 375 euros. And that's once again the power of investing into an index. S&P 500, I always say you can't really go wrong. Yes, some people say this heavily American based. And yes, that's correct. But at the same time, the majority of those companies in the S&P 500 are by nature global companies. I mean, Apple is not just operating in the United States. In fact, some of the biggest markets are outside of the United States, right? It is a global company. So I think naturally you're going to be diversified if you invest into the S&P 500. For me, I only wish they would be paying a higher dividend. Then I might be buying even more of it. But as a solid pillar in my portfolio, I really like it. I'm happy to hold it. And over time, even invest more in it to further grow it in the future. Then we have BlackRock, which is another stock that I actively buy, a company I really personally love. I know they're always often in the bad press, but overall, when you look at the fundamentals, they're really doing very well. Even though right now I'm pretty much break even, you can see here up 3.38% or 77 euros. But once again, long term, I really think that company is a company you want to be having in your portfolio. So I will definitely be buying more of it as the price starts coming down a bit further. Lloyds Bank, again, another stock that I got as part of a sign-up bonus. Then we have ASML, which is actually a really interesting company because these guys, is a Dutch company, is one of the most important companies for any chip makers because that's actually one of the leading companies in the world that builds the equipment that helps companies to build chips. You need the most advanced technology and machines to build those. And that's where ASML comes in. And really, it's actually a really interesting company. I recommend you to read more about them. Sadly, they don't pay a high dividend, but long-term future with all the chip shortage going around, definitely a strong company to have in your portfolio and consider. Then some more stocks. You can see very small holdings. Tesla, personally, I wouldn't be holding any Tesla stocks. I wouldn't mind driving a Tesla one day. For me, it's just too volatile. It goes up and down. It can change the stock price from one tweet to another from Elon Musk. And for me, when the company is more driven by sentiment rather than fundamentals, it's not something I want to invest in. It's just too hot for me. For that, I have my Bitcoin. That's already risky enough, but I don't need Tesla on top of that. Heineken, Starbucks. Then we come to Polygon, my third crypto holding in the portfolio, only at 2.3K, so a bit smaller than Ethereum and Bitcoin. Bitcoin obviously being by far the biggest one I have. But yeah, you can see here also overall, together with Bitcoin, it has been appreciating in price in recent time, even though that number is not representative, because actually, once again, the history sadly is missing from those purchases. But I still think I'm slightly down on that as well. Coca-Cola is another stock that I've actively been buying through my Interactive Brokers account, currently up by €2.60, so probably the equivalent of one Coca-Cola. But, I'm really happy with that. Again, long term, I'm really confident that that stock will only go one direction, and that should be up. The dividend is a little bit on the lower side, but it's a strong established company. There's not much volatility, and I'm pretty sure that in 20 years, in all the AI world, meta world we might be living in, one thing is for sure, I really still think people will be consuming some kind of Coca-Cola product. And it's not only the Coca-Cola drink that people are having, even though Warren Buffett should probably be the brand ambassador for Coca-Cola. He's almost 100 years old and drinks 5 Cokes a day and still one of the smartest investors in the world. They have a range of products, so really a great company that I'm bullish on the long-term future for them. Then we have Alphabet or Google, another company I have in my portfolio, and a company that I actively bought and still hold. And that's one of the few companies that actually doesn't pay me a dividend, where I have a significant holding in. So I was often thinking, should I sell them and use those funds to invest into a company that pays me a dividend? But at the same time, Google is an amazing company. And once again, despite all the challenges they had in recent times, with Microsoft almost surpassing them in terms of AI, etc., I really think long-term Google, the future looks bright for them. And then we have those stocks that sadly at the moment are in the red. PayPal is the stock that I got, so I'm not really too worried about that, down 43%. Pepsi, similar to Coca-Cola. Again, that's a company I actively bought through my Interactive Brokers account. It does pay me dividend. And in the future, as the price comes down, I'll definitely look into adding even more to that. Then we have Altria Group, which is another company I'm really quite excited about. Yes, it's a boring smoking company, and I'm not a smoker myself, but at the same time, they pay over 9% dividend per year, which is really exciting. And overall, the stock price has been actually doing pretty well. Yes, I might be down right now, but I almost got the same amount of dividends paid to me already. So I could be buying more Altria shares in the future. So yes, while in 50 years, probably people will not be smoking traditional cigarettes anymore, at the same time, they're also diversifying away into other forms of smoking, smokeless technology, all this e-cigarettes, etc. Again, I'm not a smoker, so I'm not really, aware of all the latest trends, but they're definitely, staying with the times, developing their things. And honestly, yeah, I don't want to have a huge portfolio in them, but to get a sweet dividend income from them every 3 months, that's definitely nice to get. Then BMW, again, a company I haven't bought, but got as a gift. And then we have Vici, which is one of my 2 REITs. You can see here Vici and Realty Income. Both of them a little bit down. Now, naturally, that is the case because the interest rates are so high. Imagine yourself, if you take a mortgage right now, you'll be paying a fortune to finance your house or apartment, whatever it will be, because the interest rates are so high, and they suffering from the same because often, they borrow money to buy new properties. And right now it's very expensive. The expansion growth has been slowing down. And that obviously reflects also a little bit on the stock price. That's why right now it's a great time to scoop up more shares in those companies, especially Realty Income. I'm really bullish on. They pay me a monthly dividend, which is now really quite attractive. The price came down substantially, and in 5-10 years from now, I really think I'm really going to be benefiting from the purchases I'll be doing in the next few months. Then we have Morgan Stanley, another great stock that I've been investing on quite a bit, even though they're down right now. They're in the business of doing mergers, acquisitions, and they want a low interest environment because it's just more conducive towards making deals. But now with interest being so expensive, naturally deals are also being reduced. So that is reflected in share price over here. But once again, as an investor, I'm really happy about this because it allows me to scoop up more of their shares and in the future benefit from price appreciation and dividend income. Then a couple of more stocks that I got as referral bonus: Mercedes-Benz, Delivery Hero. And next up we have LVMH, arguably one of the biggest European companies we have. And actually it's a real luxury conglomerate I was really bullish on. Unfortunately, in recent times, they came down quite a bit in price. You can see I'm down 100 euros, which is not too bad, but still, I really bought it at the peak and now it's been coming down. And I was actually really considering to sell it because once again, they only pay a dividend twice a year, which is not as attractive to me. Plus, I really think also there's a shift going on, especially with younger purchasers, because they increase the prices so much. And I think there's a trend away from all these super brands, etc. There's now the emergence of quiet luxury, people, not willing to spend on all these fancy brands, etc. So honestly, long term, I'm really not too bullish on them. For now, I'm holding on to it. But if I see the price continuing to drop, I might rather take the loss and reinvest into another company, because also the dividend is less than 2%, which for me, really, as I said, every 6 months, less than 2% for the whole year is not really so attractive for me. And that's why I might actually eventually exit that position. Then we have Pfizer, leading pharma company in the world. Just a few years ago, 2020, 21, we all know what happened. They've really been booming because they were leading in producing a certain thing. And obviously since then, revenues came down substantially. But at the same time, I still think they have really strong fundamentals. They also use that cash that they made during these times and deployed that cash to acquire new companies that will really be boosting their revenues in the future. They have really been on a downward trajectory in pricing. And honestly, I've been scooping up more and more shares of them along the way, and they pay me a nice dividend, and I'll definitely continue to invest in them. Right, with this, let's move to the dividends over here. And you can see for next year, 2024, I will be earning just shy of 1K. And honestly, very soon, maybe even December, if I continue to buy as I buy new stocks every single week, I should be hitting the 1K, which is my goal. Now, having said that, of course, I have to mention that this is pre-tax, right? On top of it, there will be a withholding tax applied to all my US dividend stocks of 15%. And then once you receive it, even though you might choose to reinvest, technically you still have to pay an income tax on it. Obviously depends on the country where you live in, but of course it's still a small tiny number and less than I actually make in terms of interest income right now. But long term, that will really start compounding. When you can see here overall, just in 2021 I made 14 euros, then 2022 146, this year 508, next year already doubled. So you can really start seeing that compounding effect, and in 5-10 years from now it will be definitely significantly more. And long term, if I stick with it, I'm really confident that I can get to a 6-figure annual dividend income. I'm really sure that's my goal and I will work towards it. But right now, let's start with 4 figures, get to 5, and eventually 6 figures. And I really think it's gonna be so nice, especially once you get old. I'm not a believer in investing in pension plans because, I think I can manage my money better than the government can do it for me, especially since I'm moving across different planets. My goodness, different planets. Especially since I'm moving from country to country, it's really quite difficult for me to have any kind of pensions, and having those dividend income in the future really gives me that sense of security on top of all the various investments and income streams that I'll be having by then, of course. And then you can see here all my transactions. And just for the month of November, you will see here, that's all the transactions that have been happening basically all the way from here. So that's basically all the transactions just in November. So I really appreciate that GetQuin, pulls them all together, because individually to track them or manually input them would be just impossible. Now, obviously, some of them are the bonus shares that I've been receiving, but it's still nice to see that and track that and see that rolling in over here. But also the dividends that I'm getting on those smaller shares. It's still nice to see, every day when I log in, I can see, oh, you got a small dividend on stock that I didn't even expect that I had in my portfolio. So it's really nice to track that, etc. If I really want to deep dive into one specific portfolio, I can just go into interactive brokers over here, and that's really the true portfolio directly reflecting my interactive brokers account, and that's my main stockbroker of choice, where I'll continue to invest, especially in my dividend producing stocks. And yeah, here I can really see all the exact dividend income. It's not too overwhelming with all these referral stocks, etc., because here I don't get any. And that's really the pure stock buys I've been doing, or sells. Here I can see all the dividends. It's just keep an eye, and it's nice to have it consolidated rather than having to log in into every single broker that I have out there. And then we can quickly go into my allocation, which is also very nice over here. Just click on show more, and you can see all the various allocations of your portfolio. Now here, very easily, I can see the majority right now is actually in crypto, 58%. Then I have 28% stocks and 14% ETF. So that's a little bit crypto heavy, you could say, but long term, as I've been starting to invest more and more into stocks, that number has been going up. It was significantly less, and I haven't been buying any crypto in recent times. And I'm not planning to do so in the future. So I think it will become more balanced going forward. Positions, you can see here very quickly what are my biggest holdings, and that's nice to see with a glimpse what is your biggest positions. Then of course the regions. Now regions is a little bit hard to analyze, because basically other is crypto, because crypto doesn't have a particular geographic location, so it's a little bit distorted. But apart from that, obviously majority is in North America, and then some other parts of the world. In terms of sectors, once again, it's a bit hard to compare, because other, that pertains to crypto, but still you can get an idea for all the rest. IT, I'm obviously very heavily invested, financials, real estate, that are actually sectors that I like to invest and continue to invest going forward. Then assets, very nice to see on the big picture, crypto versus equity, and equity includes stocks and ETFs, so that's considered equities together. So in that way, it's almost balanced, getting better. And as I said, as I continue to invest more into equities, that number should be more and more balanced going forward. Countries, once again, is not really representative, because other is being the biggest part with crypto. And currencies, that's also quite nice, because I do believe in diversifying also your currencies. So you can see right now, apart from crypto, US dollars is my second biggest holding. Even though I personally live in a European country, I transact in euros. So naturally, I own a lot of euros. So I'm actually quite happy having a USD heavy portfolio. So that way I have a bit of a hedge. If the euros happen to go down, then usually you end up having a pickup in the USD and vice versa. So I'm really happy to offset those two. On top of it, of course, crypto, if you want to consider it a currency, that's nice. Between those three currencies, that's my biggest holding right there. And there you have it, guys. Hope you found it useful. If you want to see more of that, let me know in the comments down below, and I'm happy to do this on a regular basis. Next up, check out this video over here, where I'm actually going to run you through the entire GetQuin platform and how you can get the most out of it for yourself. As always, thanks a lot for watching. Stay healthy, get wealthy, and I'll see you in the next one. Ciao.